afternoon. So when you think of FinTech, what is the first thing that comes to mind? Is it payments, lending, crypto wallets, or maybe that buy now, pay later app that seems to know your habits better than your spouse? Now most people think about the applications, the visible side of innovations, but I want to take you deeper, beyond the apps, beyond the buzzword, to what I call the architecture of trust. Believe every FinTech product you use, whether it's a digital loan and insurance chatbot or an investment platform, lies something invisible yet absolutely essential, and that is data. And data is not just a technical term. Data is the DNA of trust. Without it, there's no algorithm to score your credit, no ledger to record your payments, no compliance report to prove you did things right. So let me ask you this. What ties a flood detection system in Cambodia, a language AI model in Myanmar, and a mobile banking app in Jakarta together? The answer, and it's the same across every single project you heard about the week, is data. Data fuels everything we do. It's the raw material for those chiral polarity classification models, the energy behind PM 2.5 air quality forecasts, and the foundation for IoT flood warning systems. Now take that same principle and apply it to finance, and suddenly data becomes more than an input. It becomes the transaction itself. In FinTech, data is identity, it's collateral, it's creditworthiness, it's risk, reward, and regulation all in one. That's why when we talk about data governance in FinTech, we are not having a side conversation about compliance and privacy matters. We are talking about the beating heart of the ASEAN digital economy. And here's my central message to you today. If ASEAN is truly to become a $2 trillion digital powerhouse, you must learn not only to innovate fast, but also to govern smart. Because governance is not the enemy of innovation. It's the launchpad for responsible, sustainable growth. When we get governance right, we build confidence. And when we build confidence, investors, consumers, and innovators all lean in. That, ladies and gentlemen, is how data turns from disruption into distinction, and how trust becomes the most valuable currency of our FinTech future. Now let me start this next part with one simple number. 839 million US dollars. That's how much FinTech companies across Southeast Asia raised in just the first 9 months of 2025. Now pause for a second and let that sink in. Think about what was happening globally at that time. Inflation, interest rates hikes, investor caution everywhere. And yet the world capital still found its way here to ASEAN. So let me ask you, why is the world betting on ASEAN? Because they see something extraordinary. They see energy, resilience, and a region that is building trust in the digital economy faster than almost anywhere else. But let's not stop at 839 million. That's just a teaser. By 2030, ASEAN's digital economy, from e-commerce to digital payments, from logistics to lending, is projected to hit $1 trillion US. And if we get our framework right, especially under the ASEAN Digital Economy Framework Agreement, or DEFA, that number would double to $2 trillion US. Now, here's my question for you. What does $2 trillion US really look like? It's not just a statistic. It's opportunity flowing through every village, every startup, and every smartphone. It's digital loans reaching small vendors in Yangon, instant remittances helping families in Manila, and cross-border investments linking Singaporean capital to Cambodian entrepreneurs. This isn't market growth. This is a tectonic shift, a once-in-a-generation transformation in how we define value, risk, and inclusion. And at the heart of this revolution sits one simple word: FinTech. So what makes FinTech so powerful? It's not one technology, it's the fusion of many. It's AI analyzing your spending patterns. It's machine learning detecting fraud before it happens. It's peer-to-peer platforms lending to the unbanked. It's distributed ledgers creating transparency in transactions. It's smart contracts turning trust into code. And what connects all of them, every single one, is data. Without data, the algorithm is blind. Without data, credit scoring falls. Without data, there's no inclusion, no trust, and no growth. Data is no longer just another business asset. It's the new critical infrastructure of finance. Think of it as the digital scaffolding, holding out the entire FinTech building. Now, here's the real question we must all ask ourselves. If data is not the foundation of finance, who's governing the foundation? Because if you build skyscrapers of innovation and weak data governance, one breach, one misuse, or one cross-border conflict could bring the whole structure down. That's why today, we are not talking about compliance for compliance sake. We are talking about data governance as strategy, as the master plan that decides whether ASEAN becomes the world's most trusted FinTech hub or just another case study in lost potential. And when I say governance, I don't mean another checklist or audit form. I mean a living system, rules, responsibilities, and ethics working together to make data safe, protected from misuse and theft, high quality, accurate, complete, and reliable, compliant, aligned with every jurisdiction's law, and available, ready for innovation, not locked behind fear. That, ladies and gentlemen, is what true data governance means. It's not the handbrake on FinTech, it's the steering wheel. Because in this race towards a $2 trillion digital economy, the winners will not be the fastest. They will be the ones who can drive with trust. So let me ask you something. Why ASEAN? Why is our region, stretching from the Mekong Delta to the islands of Indonesia, so uniquely poised not just to join the FinTech revolution, but to lead it? Let's break this down, because this is where our real strength lies. First, look around us. Not just in this room, but across our entire region. We have a young, energetic, and fiercely digital population of over 660 million people. And here's the thing, unlike Europe or the US, where users migrated from desktop to mobile, we in ASEAN skipped the desktop era altogether. We went straight into mobile first. So what does that mean? It means we're not dealing with passive tech users. We're dealing with digital natives, people who expect instant payments, one-tap transactions, and seamless user experiences. Have you noticed how in our region, if an app takes more than 3 seconds to load, users delete it? That's the level of expectations we are working with. Our diversity of languages, cultures, and habits might seem a challenge to developers, but to FinTech innovators is a gift. Because if you can build a FinTech solution that works in ASEAN, multilingual, multicultural, multi-jurisdictional, you can scale it anywhere in the world. So here's the takeaway. ASEAN isn't just a test bed for innovation, it's the ultimate stress test. And that's what makes our digital ecosystem battle-ready by design. Now here's the second reason ASEAN leads this revolution. FinTech is solving real human problems here. Let me ask you, how many of you know someone who doesn't have a traditional bank account but has a mobile phone? Almost everyone does. Across ASEAN, hundreds of millions remain unbanked or underbanked. Not because they lack ambition, but because traditional banking never reached them. The nearest branch might be hours away, or they lack the right documents, or their income is informal. FinTech has changed that story. With mobile wallets, micro-lending apps, and digital IDs, people can now access financial services with just a few taps on their phones. And here's the magic. This transformation is driven by data. Alternative data, things like mobile usage, e-commerce history, or utility payments helps determine creditworthiness where traditional banks saw only risk. Let me give you an example. A street food vendor in Bangkok who pays a phone bill on time every month, that's a data point. A ride-hailing driver in Manila with consistent ratings and daily earnings, that's another. Put those together and suddenly you have a digital credit profile strong enough to qualify for a loan. And that's what I meant when I say data governance isn't just commercial, it's humanitarian. It empowers families, supports small businesses, and builds a more inclusive ASEAN economy. FinTech, when governed responsibly, doesn't just move money, it moves lives. Now the third advantage is that often overlooked our geography. Have you noticed how ASEAN's geography forces us to innovate? We are not one big landmass like the EU, where we are islands, rivers, mountains, a region of stunning complexity. To connect a fisherman in Cebu with a platform in Singapore, or to move money from Jakarta to Vientiane, you need serious innovation and serious governance. Because when you operate across jurisdictions, currencies, and legal frameworks, you learn how fast to build systems that are flexible, resilient, and adaptive. In other words, complexity has made us strong. ASEAN fintechs are solving problems that Silicon Valley never had to face. Last mile connectivity, fragmented regulation, and linguistic diversity. So let's take a step back. If we have the talent, the demand, the inclusion mission, and the creative pressure of geography, what does that make us? It makes us the most fertile fintech ecosystem in the world. But here's the catch. Having great coders is not enough. We also need great governance of data. Because no matter how brilliant your algorithm or how elegant your app, without proper data governance, ethical, legal, and secure, your fintech can't scale, can't gain trust, and can't last. So yes, ASEAN's strength is diversity, energy, and innovation. But its future, its $2 trillion future, depends on one thing above all: how we govern the data that powers it. So we've just explored ASEAN's incredible potential. The youth, the innovation, the momentum. But as every lawyer or every lawyer-to-be in this room will tell you, every opportunity comes with its own set of legal headaches. So here's the reality check. If opportunity is the fuel of ASEAN in fintech, then regulation is the terrain. And right now that terrain is rough, uneven, and full of potholes. Let's call it what it is, a regulatory patchwork. Now let me ask you a question that many fintech founders quietly ask themselves. If I comply in Singapore, am I safe to operate in Thailand, Vietnam, or Indonesia? The short answer, not yet. The longer answer, it depends on how many lawyers you can afford. ASEAN does not yet operate as a single unified legislative bloc. We are, legally speaking, 10, 11 beautifully complex jurisdictions, each with its own definitions of what constitutes personal data, consent, or data transfer. In Singapore, the Personal Data Protection Act, PDPA, sets a gold standard. Clear principles, strong enforcement, and alignment with international norms. But elsewhere, we still see fragmented sectoral rules. One law for banking, another for telecoms, and sometimes none at all for fintech startups handling personal data. Now imagine being a fintech entrepreneur trying to expand regionally. One country tells you, store your data locally. Another says, transfer it freely but get explicit consent. A third asks for government approval before export. You end up building 3 versions of the same app. One for Jakarta, one for Manila, and one for Phnom Penh. Not because of user needs, but because of legal incompatibility. That's not just inefficient, it's unsustainable. Here's a practical scenario. You run a fintech startup in Jakarta. Your credit algorithm works beautifully until you try to launch in Phnom Penh. Suddenly your entire data pipeline grinds to a halt. Why? Because the moment you cross that invisible national border, your legal framework changes. In Indonesia, you may face data localization rules, meaning personal data must stay within the country. In the Philippines, you might be required to use binding corporate rules or model contracts for transfer. In Vietnam, you need prior approval, and in Singapore, you are fine provided you meet PDPA eligibility. Same ASEAN, different universes. Now let's visualize this. Imagine trying to build a single regional highway, but every country insists on using a different rail gauge. The train can start strong in Singapore, but derails at the next border. That's exactly what's happening with FinTech data right now. Who suffers most from this complexity? Not the large, well-funded FinTechs. They have compliance teams and external counsels. It's the SMEs, the startups, the innovators, the very people driving 90% of our FinTech creativity. They can't afford multiple data storage centers or legal mapping for 11 jurisdictions, so they scale back and they stop expanding. And that's how regulatory fragmentation quietly kills innovation. Not with a single law, but with thousands small inconsistencies. To them, compliance isn't just expensive, it's existential. And when compliance becomes survival instead of strategy, innovation suffers. Let me illustrate this with a human story. Picture a migrant worker from Malaysia who moves to Thailand for work. He is responsible, hardworking, and has a strong digital payment record back home. Years of microtransactions, steady mobile top-ups, a clean e-commerce trail. Now he applies for a small personal loan in Bangkok. The Thai FinTech company wants to approve it, but it can't. Why? Because that data, his proof of reliability, is locked in Malaysia. The Thai firm can't legally access it due to differing consent standards and localization laws. The algorithms can't see the full picture. So what happens? He's denied credit. Not because he's high risk, but because the law says no data, no decision. That's not just a data problem, that's a human problem. Every time our laws prevent ethical data flow, we are not just blocking transactions, we are blocking trust. Now let's look beyond ASEAN. When the European Union introduced the General Data Protection Regulation, GDPR, it wasn't easy. There was resistance, confusion, and yes, plenty of fines. But the outcome? A unified, trusted digital marketplace where data can flow freely, responsibly, and securely. One rulebook, one system of trust, one regional advantage. That's what ASEAN needs. Not a copy of GDPR, but a cohesive ASEAN-tailored framework that allows interoperability without erasing sovereignty. Because right now, while we debate which law applies, others, the EU, China, and even Africa, under the African Continental Free Trade Area, are racing ahead with interoperable systems. And here's the sobering truth. Every day we delay harmonization, we lose billions in potential digital trade. But even more than that, we lose momentum, innovation, and the chance to lead. So let me close this section with a question for everyone here. If data is the new oil, then what happens when every country insists on keeping its own oil in separate tanks? You don't get energy, you get inefficiency. Our challenge, therefore, is not just technical, it's legal and institutional. We must build pipelines of trust that connect our economies without diluting our sovereignty. That is the essence of data governance in FinTech. Balancing innovation with protection and national interests with regional opportunity. And that's why this so-called regulatory patchwork isn't just a policy issue, it's the defining test of ASEAN's readiness for the digital future. We have just seen how fragmented regulation across ASEAN creates operational friction. But that legal patchwork leads directly to an even bigger issue, one that can quietly erode everything we build. It's not about code, it's not about compliance, it's about trust. Let me ask you, how many of you have ever hesitated before clicking Pay Now or a new FinTech app? Maybe you thought, what if my data gets stolen? Or what if this app isn't secure? That hesitation, that split-second pause, is the trust deficit. And in FinTech, that's fatal. Because our entire digital economy depends on confidence. A confidence that when you send money, it arrives. That when you share data, it's protected. And when you save, it won't vanish overnight due to a cyber breach. Now, here's the harsh truth. Globally, the financial sector remains the most lucrative target for cyber criminals. These bad actors don't attack randomly. They follow the data because that's where the value lives. In 2025, the average cost of a single data breach hits USD $4.4 million. And for a young fintech startup, that's not just a financial loss, it's a death sentence. All it takes is one breach, one leak, one headline, and months, even years of hard work, earned trust vanish overnight. Investors withdraw, users uninstall, regulators descend, and the narrative changes from innovation to insecurity. Now the issue isn't just that the technology is failing, it's about perception. Consumers in ASEAN are savvy, they read the news. They see stories of stolen credentials, fake investment apps, phishing scams. They don't trust the black box. They don't trust what they can't see. And even the most technologically advanced fintech platform can fail to win over customers if users feel unsafe. And that's why even today, we still see cash on delivery as a preferred option in many markets. Think about that. In the middle of the digital revolution, millions still prefer handing over paper money to a delivery driver instead of making a digital payment. Why? Because cash feels real and digital feels risky. So here's a provocative question. If we can't convince consumers that their data is safer online than in their wallet, have we really achieved digital inclusion? Here's where law meets psychology. In ASEAN, because of our uneven regulatory landscape, a consumer's trust level often depends on where they live, not what platform they use. A user in Singapore might feel protected under PDPA, clear rights, clear resource, but their friend using the same app in Laos or Myanmar might have no such assurance. So what happens? Confidence fractures. The consumer in one country trusts the platform, the other hesitates. And cyber criminals, they exploit the exact asymmetry. They look for weak links, for jurisdictions with weaker enforcement, and that's where they strike first. The irony is striking. One region, one platform, but 11 levels of trust. That unevenness doesn't just slow adoption, it creates systemic vulnerability. And here's the consequence. Every breach, every misuse of data doesn't just affect one company, it weakens public confidence across the entire digital ecosystem. A breach in one country can cause a loss of trust in another. That's why inconsistent governance doesn't just create inconvenience, it multiplies insecurity. Let's bring this closer to home. When a breach happens, it's not just data that's stolen, it's identities, livelihoods, sometimes even hope. A single cyber attack can expose someone's entire financial footprint. Their salary, their biometric ID, their transaction history. Imagine what it would mean for a young professional who suddenly sees their e-wallet drained, or a retiree whose savings vanish overnight. This erosion of trust doesn't just hurt markets, it undermines the human promise of fintech, empowerment, access, opportunity. When consumers lose faith, adoption stalls. When adoption stalls, innovation stalls. And when innovation slows, development stops. That's how fragile the balance really is. So how do we rebuild trust? The solution lies in alignment, not just of technology, but of principles and perception. We must act on three fronts. Transparency. Consumers must see in plain language how their data is used, stored, and protected. The more visible the protection, the stronger the trust. Education. Digital literacy isn't just about how to use an app. It's about understanding why one can trust it. We need public campaigns that demystify encryption, consent, and privacy rights, because an informed user is an empowered user. Third, enforcement. Regulators must not only set rules, but must be seen enforcing them. When people witness visible, consistent accountability, whether through penalties, public advisories, or cross-border cooperation, trust grows. But let's be clear, unless we move forward toward a shared regional baseline for data protection, where every ASEAN citizen, no matter where they live, enjoys the same level of security, these efforts will remain fragmented. And fragmented trust is no trust at all. So let me leave you with this thought. In the digital economy, trust is the true currency. It's not Bitcoin, it's not blockchain, it's not AI. It's trust, earned, protected, and never taken for granted. And when governance is inconsistent, that currency devalues faster than any crypto crash. If we want ASEAN's $2 trillion digital dream to become a reality, we must protect the one thing that cannot be coded: public trust. So we've explored the legal fragmentation, we've talked about trust deficit. Now let's enter the most complicated and frankly the most human part of the story, the operational vortex. This is a swirling storm where technology, regulation, and human behavior collide. It's not about what the law says on paper, it's about what happens inside the fintech firm. The real day-to-day battle between agility and accountability, between innovation and compliance. Let me ask you, what is the first thing a fintech needs to do before it can move money? Know its customer. Simple in theory, but in reality is one of the hardest things to get right. Every fintech in ASEAN is designed for speed and scale. Instant onboarding, one-click payment, real-time verification. But here's the paradox. The faster you move, the more attractive you become to those who want to exploit your system. Money launderers, fraudsters, mule account networks, they thrive in high-speed, high-volume environments. That's why anti-money laundering, AML, and know your customers, KYC compliance has become a nightmare of complexity. Each new customer requires a data-driven pipeline. Verification of identity, validation of the source of funds, ongoing transaction monitoring, cross-checking against international sanctions and watch lists. All this must happen instantly because if your onboarding takes too long, your competitor gets the user. Now imagine what happens if your data is inaccurate or siloed. Your AI can't spot patterns. Your risk models flag false positives. And suddenly your compliance cost skyrockets. Or worse, you miss the red flag and face a multi-million-dollar penalty. And here's the tough question. Can we really call it innovation if our systems can't guarantee integrity? Because the truth is, when data governance is weak, compliance doesn't just become expensive, it becomes existential. Now let's talk about the second vortex, classification uncertainty. Raise your hand if you ever heard the debate on whether a cryptocurrency is a security, a commodity, or payment instrument. Exactly. No two regulators will give you the same answer. Across ASEAN, regulators are still wrestling with how to define and govern digital assets like tokens, NFTs, and DeFi instruments. And the classification isn't a mere academic exercise. It determines everything. Which regulator has jurisdiction? What disclosure rules apply? What kind of data protection and reporting are required? If a token is treated as a security, it triggers capital market regulations. If it's classified as a payment instrument, it falls under banking supervision. If it's considered a commodity, it may escape both for now. So fintech founders are in a limbo. Should they innovate now and risk falling foul of future laws? Or wait for clarity and watch their competitors from the US or EU eat their lunch? This uncertainty is slowing investment and stifling innovation in one of the most exciting frontiers of fintech. Decentralized finance, DeFi. Think about it. ASEAN has the talent, the infrastructure, and the use cases to lead the DeFi revolution. But without clear, consistent definition, the lawyer says, maybe. The compliance team says, not yet. And the innovation quietly stalls. And that's how opportunity slips away, not with resistance, but with hesitation. So how do we escape this vortex? The answer lies in agile data governance, a mindset where compliance evolves as fast as technology does. Let's take blockchain as an example. Its greatest strength is also its greatest regulatory headache, immutability. Once a transaction is on the chain, it's there forever. So what happens when the regulator says, delete that data? You can't. That's not how distributed ledgers work. That is where compliance models built for centralized databases simply break down. FinTech need governance that can flex, not freeze. That's why we're seeing the rise of RegTech, an AI-powered system that automate compliance in real time, detect anomalies, flag suspicious transactions, and learn as they go. But here's the catch. Even the smartest RegTech is only as effective as the clarity of the law that's built upon. If the rulebook is vague, the algorithm will be blind. So again,
we return to governance, not as Looi Teck, but as the enabler of innovation. Because agile, clear, predictable rules don't slow innovation, they accelerate it safely. Now, let's be honest, even the best system fails without the right mindset. The third layer of this Vortex is not technical or legal, it is human. Inside many organizations, compliance is still seen as a box to tick, an administrative chore to satisfy the regulator. But that mindset is dangerous because poor governance rarely starts with bad technology. It starts with people. Departments that hoard data, teams that resist change, leadership that treats data ethics as optional. When we treat compliance as an obstacle instead of a competitive advantage, we weaken not just our security but our credibility. So how do we change that? It starts with leadership. We need CEOs and general counsel to stand up and say, data governance is not a cost center, it's our license to operate. It continues with culture, training our teams, rewarding ethical data use, creating cross-functional data stewardship units that connect legal, tech, and business. And it ends with incentive alignment, linking good governance to performance, promotion, and even investment outcomes. Because the market has changed, investors now ask not just how fast can you scale, but how responsibly can you scale. In today's fintech, governance isn't the fine print, it's the headline. So as we stand at this intersection of law, technology, and human behavior, let's remember, compliance is not the enemy of innovation, it's the oxygen that keeps it alive. When we embrace governance as a growth strategy, not as a bureaucratic burden, we future-proof ASEAN's fintech ecosystem for the long game. Because at the end of the day, innovation without integrity isn't progress, it's paramount. So we spent the last few or more than half hour navigating through a maze of fragmentation, distrust and complexity from inconsistent laws to operational chaos. But now let's take a breath. Because despite those challenges, ASEAN's greatest strength is not uniformity, it's unity in purpose. The path forward isn't about eliminating our diversity, it's about harmonizing it. Turning 11 distinct legal systems into one connected digital opportunity. And that, ladies and gentlemen, is where the ASEAN Digital Economy Framework Agreement, or DEFA, comes in. Now I know what some of you might be thinking. Another agreement, another policy paper. No, this is different. DEFA is not just a document, it's a declaration of intent to build one ASEAN digital market that speaks the same data language. Think about it. A fintech firm that's compliant in Singapore, the Philippines, or Malaysia should not have to start from scratch every time it crosses a border. That's not integration, that's duplication. DEFA changes that. It's the blueprint that says, let's stop being 10, 11 digital economies talking past each other and start being one trusted, interoperable ecosystem of 660 million digital citizens. The political groundwork is already here. Negotiations are nearing completion by end of 2025 and the signing is targeted for 2026. But the window to shape what DEFA truly delivers, that window is right now. So the real question isn't will DEFA happen, it's what kind of DEFA will we build. Let's be practical. We're not aiming for identical laws across 11 countries, that's not realistic in our time frame. We are aiming for functional harmonization, interoperability without uniformity. Because in the digital world, trust doesn't require sameness, it requires standards. Under DEFA, we can create those shared standards, not to replace national laws, but to make them speak to each other. This is the smart ASEAN way, unity without losing sovereignty. So how do we make this work in practice? Through something called data passporting. Now imagine this. A fintech in Manila is fully compliant with the Philippine Data Privacy Act. Another in Singapore meets the strict requirements of PDPA. With data passporting, both are recognized as compliant across the entire ASEAN market. One certification, 11 markets. No more rebuilding the same compliance structure 11 times. Think about what that means for startups and SMEs, the lifeblood of ASEAN innovation. No more burning through capital on redundant audits, duplicated legal fees, or data localization costs. Data passporting doesn't just simplify compliance, it multiplies opportunity. It's equivalent of a digital stringent zone for fintech. a borderless framework of trust, innovation, and data flow, safely and ethically. Let's talk numbers, because harmonization isn't just a legal victory, it's an economic one. Study shows that DEFA and cross-border data interoperability, ASEAN's digital economy could double to $2 trillion by 2030. That's not wishful thinking, that's the power of scale. And compliance costs, they could drop by 20 to 30%, immediately freeing up billions of dollars for innovation, investment, and digital inclusion. Imagine what ASEAN FinTechs could achieve if those resources were redirected from bureaucracy to breakthroughs. That's what harmonization makes possible. Now let's bring it back to governance. DEFA gives us a chance to codify a common baseline for data quality, security, consent, and accountability. It's about setting minimum non-negotiable standards, how data can move securely across borders, how digital identities are verified and protected, how consumers can seek redress no matter where FinTech is headquartered. This ensures that every ASEAN citizen, whether in Yangon, Jakarta, or Vientiane, has the same level of protection, the same rights, and the same confidence when transacting online. It levels the legal playing field without erasing national priorities. Let's be honest, ASEAN rarely gets a moment where political will, economic urgency, and technological momentum will align. But this, right now, is that moment. The DEFA negotiations give us an unprecedented opportunity to embed data, governance, cybersecurity, and consumer trust at the heart of the region's economic architecture. We cannot wait for perfect alignment because technology won't wait, criminals won't wait, markets won't wait. If we miss this window, we risk becoming a region of parallel innovators instead of collaborative leaders. So what does success look like? Success is when a FinTech in Bangkok can serve customers in Hanoi, Phnom Penh, and Kuala Lumpur with one license, one set of trust protocols, and one common understanding of data ethics. Success is when our laws empower innovation instead of intimidating it. Success is when the world looks at ASEAN and says, they did it. They built a digital market that's inclusive, ethical, and unstoppable. Because at the heart of this isn't just policy, it's people, the 660 million ASEAN citizens whose lives will be better connected, more financially empowered, and more digitally secure because we chose to govern data together. So I leave you with this question. Will ASEAN be a collection of 11 digital economies or one digital powerhouse? If we choose harmonization through DEFA, we are not just keeping pace with the world, we are defining it. So we have just seen how DEFA lays the foundation of harmonization. But foundation alone isn't enough. It must be built. And what we build next will decide whether ASEAN becomes a regulator of innovation or an enabler of it. Let me pose a question. When you hear the word regulation, what's the first emotion that comes to mind? For many innovators, it's fear or frustration. They see regulators as red tape, not as partners. That has to change. Because in this digital decade, regulation cannot be a brake pedal. It must be a steering wheel guiding innovation safely forward. The time has come for a paradigm shift from reactive rulemaking to innovation-first regulation. What does that mean? It means we design policy with experimentation at its heart. We create space for creativity while still protecting consumers. We say to startups, don't fear the regulator, work with them in a safe, structured environment where both sides learn. That's where the regulatory sandbox comes in. Now imagine this. A FinTech startup wants to launch a decentralized credit registry that uses blockchain to verify data. Another builds an AI-driven claim processor that detects fraud in real time. Under normal conditions, both might take years to get regulatory approval if they survive that long. But in a sandbox, they can test these ideas with real users under real conditions and with temporary pre-agreed regulatory boundaries. It's like a controlled laboratory, except the experiment benefits the whole economy. Startups gain real-world feedback, reduce the cost of failure, and move faster. Regulators get insight into new technologies before they become mainstream, helping them craft smarter evidence-based rules. It's a win-win, and the model is already working. As of 2025, there are 59 active regulatory sandboxes across Asia, from Singapore and Hong Kong to Malaysia, Thailand, and Indonesia. Singapore in particular has turned successful sandbox pilots into permanent policies, prove that safe experimentation leads to regulatory evolution, not chaos. Now, imagine taking that concept a step further, across borders. What if we created an ASEAN FinTech testing corridor, a shared framework that lets startups test products simultaneously in multiple markets under mutually recognized safeguards? A startup in Manila could pilot a product in Bangkok, and data from both trials could feed directly into a regional database for best practices. Regulators could co-author guidelines instead of issuing 11 separate versions. This corridor would do for innovation what DEFA is doing for data. Create trust through cooperation, and think of what the signals to global investors. ASEAN isn't a patchwork of fragmented regimes. It's an innovation zone, one that is bold, coherent, and globally competitive. But innovation-first regulation needs an equally innovative toolkit. That's where RegTech, regulatory technology, steps in. Let's be clear, RegTech isn't a buzzword, it's the operating system of future governance. Through AI, machine learning, and advanced analytics, RegTech allows compliance to become real-time, adaptive, and intelligent. Instead of manual audits and slow reporting cycles, RegTech systems can auto-verify KYC documents in seconds, continuously screen transactions against evolving AML watch lists, detect anomalies, flag suspicious activity, and file regulatory reports automatically. The result? Fewer human errors, lower costs, and higher confidence. And perhaps, most importantly, a level playing field. Because with RegTech, even a small fintech in Chiang Mai can meet cross-border compliance standards in Kuala Lumpur without hiring an army of lawyers or auditors. That's democratizing innovation. Now let's not forget the human side. Regulation is written by people, interpreted by people, and implemented by people. So the real innovation isn't just in technology, it's in mindset. We need regulators who are curious, collaborative, and data literate. We need entrepreneurs who see compliance as partnership, not punishment. And we need universities, industries, bodies, and public task forces to train the next generation of RegTech savvy professionals. Because the ultimate goal isn't deregulation, it's smarter regulation. When regulators become co-designers instead of gatekeepers, innovation doesn't just survive, it thrives. So let me leave you with this thought. In the analog era, regulation was carved in stone, fixed, slow, and reactive. In the digital era, regulation must be a living code, iterative, data-driven, and self-improving. If we get this right, we just won't be regulating fintech, we'll be shaping the global benchmark for how law and innovation coexist. Because when compliance becomes continuous, when trust becomes measurable, and when innovation becomes safe, that's when ASEAN FinTech's future really takes flight. So we'll talk about harmonization, we'll talk about smarter regulation. Now let's talk about something even more profound, changing the way we think about data itself. Because to truly unlock the competitive and inclusive potential of ASEAN's $2 trillion digital economy, we must move past the old idea that data is something to hoard, to guard, to keep secret. We must start seeing data for what it truly is. A shared strategic asset that must be responsibly stewarded for the benefit of all. Let me ask you this. When we say data is the new oil, what image comes to mind? For most people, it's one of ownership. Whoever controls the oil controls the power. But in the digital world, that mindset is obsolete. Data doesn't diminish when it's shared. It multiplies in value. The more ethically and securely it flows, the more opportunities it creates for businesses, consumers, for innovation. So we need to evolve from data ownership to data stewardship. Stewardship means asking not who owns this data, but how can this data best serve the person it belongs to. That's the moral code of modern data governance and the cornerstone of what we call open finance. Now, what is open finance really about? It's not about dumping data sets on the internet or forcing companies to share secrets. It's about building a structured API-based ecosystem where secure data sharing happens with explicit, revocable customer consent. Let me make that concrete. Imagine a customer in Vietnam. She can securely share her banking data with a competing fintech. Within minutes, she she receives a personalized pre-approved loan offer at a better rate. No paperwork, no waiting, no guesswork. Or imagine an insurtech company accessing anonymized e-wallet data to design affordable micro-insurance products for farmers or gig workers. People who's not been covered by traditional insurers before. That's not theory, that's open finance in action. That's data working for the people. And this is where the magic truly happens. Because open finance is not just a tool for convenience, it's a lifeline for inclusion. Across ASEAN, tens of millions of people remain unbanked. They have no formal credit history, no traditional collateral, no access to capital. But they do have something else, a digital footprint. They top up their phones, they pay electricity bills on time, they shop online and receive mobile remittances. Each of these small digital actions, when ethically aggregated, tells a powerful story of reliability. With open finance, this alternative data can be securely pooled to build an individual's credit identity. So for the first time, a smallholder farmer in Cambodia or a delivery rider in Indonesia can qualify for credit, not because of what's in their bank account, but because of how they interacted digitally with the rest of the world. And that's how data stewardship becomes social empowerment, is governance and action uplifting lives. So ladies and gentlemen, let me bring this lecture to a close. And let me deal with the last slide here. We've taken quite a journey actually together over the last several minutes when we started confronting the turbulence, the fragmented regulation, trust deficits, and operational chaos. But let's crystallize everything we discussed in 3 clear commitments, not just for policymakers or lawyers or politics, but for all of us in this room. There have to be policy agility, regulators as co-innovators. Second, there had to be investment in trust, turning compliance into confidence. And thirdly, there was a regional unity, building one digital market. So the final reflection, governance as a foundation, not friction. I'll leave you with one simple question, one that goes to the heart of our discussion. When we think of governance, the policies, the audits, the endless coordination, do we see it as a barrier or a foundation? Is governance the obstacle that slows innovation? Or is it the bedrock that leads our boldest ideas soar without collapse? For me, the answer is clear. Governance is not what limits innovation, it's what legitimizes it. Without it, our digital economy is a house of cards. With it, it becomes a fortress of trust, strong, ethical, and enduring. Thank you very much for your attention.